So the macro market, man, as hard as macro markets are hard to predict, it just feels like they're kind of zigzagging for a while now.
It seemed unlikely that there would be a kind of significant move in the short term. You've got all these kind of lingering inflation fears that, for sure, you've got commodity prices rising. I think there's also still so much kind of insanity in the market. I think we still kind of have like some SPAC hangover going on. The market's probably going to take some time to kind of unwind and better differentiate the winners from the losers.
If you really feel like you have, an advantage of stock picking good companies and stocks that you think are valued appropriately on those good companies, then, the sideways moving market like we could be in the midst of now, or in the beginnings of now, then if you pick good stocks, you'll do really well. For Tesla, the biggest thing is Shanghai reopening.
It's hard to say how big of an impact this is going to have on Q2 numbers, and whether or not the market is really aware of how big of an impact it could be. It seems like it's at least going to be 50,000 units lost of production, could be even more. You've also got huge congestion at the port of Shanghai.
I don't see a whole lot of excitement and buzz in social media about this earnings report.
The more I think about it, the more I think it's kind of likely that some of the price increases that they were rolling out all of last year, I do think those are likely to hit in Q1, at least to a greater extent than I had been modeling. As I've been looking back at the numbers, I've been increasing my estimates.
Yeah, $1 trillion market cap, $1,000 is about where we're at. It seems like the stock is sort of, in my mind, kind of right where it kind of should be. So Matt, how many vehicles a quarter do you think they would need to do to get to $6 earnings?
I think they'll get pretty close to $6 by Q4 of this year, and that's assuming like a little bit under 500,000 units. Still don't know kind of the extent to which supply chain issues are, going to impact margins. I think it's appropriate to, discount the current share price, to some extent with a higher discount rate to account for that execution risk.
The next hot topic that everyone's been talking about is Twitter and Elon. Elon, I feel like, is increasingly likely to take over Twitter and take it private and restructure that thing to be a much more efficient machine. This thing could be the biggest media platform in the world. Twitter has that potential, has the network effect embedded within it with enough momentum that Elon can really unlock it and take it off. Do you think there's a way that Elon could just like pay off the board and be like, hey, I'll go back. I'll make sure you all have nice golden parachute retirement packages from the board.
I think
it's against his principles.
He wouldn't do that.
But yeah, out of principle, he wouldn't. If that's the difference between making this happen or not happen, would he still out of principle not do it? I'm not going to place options trades, in anticipation of this stock split. It might go up anyway without the stock split, but I don't think it's going to be a catalyst to move the stock.
They can kind of get the core, like insurance quoting and like claims processing piece of the business figured out, which, to be fair, they have not yet. But if they can do that, then they're going to be able to scale way more cost efficiently.
There's something called the Traders Academy within the Interactive Brokers website, and it's free. The two ways I use options at the moment really are, if I'm selling covered calls, it's because I'm already on the fence about selling a certain amount of shares. Like if I'm thinking about selling 100 or 500 shares of Tesla for tax reasons or for some other reason to pay taxes or pay something, but I'm not sure I want to. I'm kind of on the fence, let's say, right? Tesla's at $1,000. Well, then maybe I'll sell 5 covered calls for like 1,100 strike price a month out to generate income while I'm waiting to decide what I'm going to do. And then if it happens to get to $1,100, it's like a limit order that I sold my shares at $1,100 when I was on the fence about selling them at $1,000. That's how I think of it for selling covered calls.
So it's like a 10-step forward improvement for me. It seemed like it solved all of the kind of major issues that I was consistently having.
They're stable, probably, but all good companies almost inevitably it seems like come to an end. Rocket Lab is also group came public as a SPAC, so it sort of has that kind of bad label on it. But in the long run, I think it's we're excited about it.